Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analysis Update for the 23rd of February 2012. Hi guys, I'm going to be going over the 4 majors this morning, starting with Euro against US dollar. It's going to be looking at our daily. Okay, Euro, where's it off to now? Well, heading towards this band with the top here. Price has been steadily moving higher, very tentatively over the past couple of days, as this Greek bailout has been now rubber stamped. However, the actual sentiment on the market is very, very indecisive on that. Is it willing to actually take it seriously? The Greek bailout, is it genuine? Will the Greeks actually adhere to it? Etc. 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 So we had a lot of indecision, 2 splitting tops here after this upside movement, and now this morning on the Asian session we've seen price moving higher, and going into the European session it's taking it slightly higher as well. So as it stands now, heading back up to this area here, just below the 1330-200 mark. To start with, CTC has gone blue, and our moving averages above, below price. So 13, these highs here, this candle here at 1330-200 mark would potentially be our next potential target on this trade. Just looking at our intraday, there we go. You can quite clearly see there. You take the lows over here to the high, and you can see that price is pretty much well above 23 and above all the moving averages in order. So we need our 20, 50 and the 200 institution, the CTCs in our favor as well, and 1330-200 mark would potentially be our first target for this pair. That's the 4-hour guys, and then going into the hourly. Okay, I've got RSI plotted on here, and you can quite clearly see that it's above 50, and that high that I mentioned at, there we go, roughly around here, 1330-200 is in proximity to this. Okay, are we seeing everything in favor? Yeah, we're seeing the higher swings this morning going into the European session open. You can see price is pretty much going sideways, consolidating. However, the lows have been getting higher. Okay, so the support still being supported above the institution moving average, which is what we require. Okay, and if you take the bottom of this candle here to the high we had previously, so the low here to the high recently, you notice that the 23.6 was actually a very strong support for this pair, especially yesterday. Didn't trade anywhere, didn't wait anywhere at all, but going into the latter part of the US session, we saw price moving slightly higher, and then a bounce to the upside on the Asian session. And now we're heading towards the intraday highs here at 21 at the 13, 20, what's that, 6, 7, 8, 9, so 132900 mark. Okay, we need to see price breaking above that to see a rally towards the 1330-200. But this is going to into resistance now, quite a strong resistance. It'll be interesting to see if price actually starts to consolidate to this area. But we need to see a punch higher than yesterday before we see any attempt of the highs of 13,300. The highs here, for example, you can see RSI has or was on the downside quite clearly. Especially these two here, you can see price, this one was higher, and then we got a higher than that, but that would have been a good indication that price was actually changing now, if you were in this to the upside previously, and then we should have looked to move our stop up as price consolidated, as the closer we got to 13,300, and price just went sideways. So it would have saved you a hell of a lot of time and effort, wasting a lot of time here as price went sideways, not making you real bang for buck, and all we want to do now is get a clear direction call. So ideally want to be trading above 1330-200 overall to see any further progression to the upside, or we could be seeing further consolidation here before we see a downturn occurring. So big time frames, it's far better just to rather give us back to the market, get a clear direction, and then we trade that direction, and then either way, so a nice bullish engulfing, breaking above 1330-200, closing above that area, or bearish engulfing at this ceiling level to confirm that we should be looking for further downside movement. Reason being, on our daily, we know we've been there before. There's a clear signal here of resistance. Okay, if you take the high here previously at these levels here and mark it down, 38.2. There we go. This 38.2 level here is what price needs to be trading above in order to see any further extensions higher to at least the 50%. Okay, on the daily. So the longer it stays about the 38.2 mark, the more possibility is we're going to have a further extension to the upside. CTC is in our favor. So during the course of this morning, if we can stay above 38.2 here at the 13,2500 mark. So if you want to put that in as your intraday cap support, 13,2500. There we go. Just make it nice and black so we know it sticks out. Price has got to stay above that level going into the US session today, so we can see a bounce to the upside. Otherwise, we could see another consolidation occurring and price not going anywhere fast. So this alleviates us looking for potential overbought, oversold areas, consolidation. So got to be trading above 13,2500 overall. However, like to see it being trading above 13,3200 to give us an indication. Yes, we have found support now above this 13,2500. We are making higher highs, and that will give me an indication that I should be looking for long-term more to the upside for this pair. Just in sterling cable, or sterling against US dollar, good old cable. Let's have a look. Can see the weekly here. Another week of resistance above us. Clear resistance. We've had 1, 2, 3, going to our fourth week now. There's clear resistance now above us at the 15,8500 mark. Okay, you can quite clearly see bodies, body, all in that area, roughly that area. Okay, whether you make it the 15,800, or you can see it clearly, we've had wicks to the upside, but the bodies are closing roughly around the 1584 or 15,8300 mark. That's on the weekly. If you go to the daily, you can quite clearly see the reason for that being the institution moving average. It happened before, and it's happened again. Price has actually failed on the second attempt at this area after we had a tweezer top here at resistance. Price moved back, get a morning star on a pullback, a 38.2 fib retracement. Bang, morning star, bullish, sorry, bearish, indecision, bullish, up it went. Failed again at 15,900, didn't even make the institution moving at this time, so telling you the market sentiment is definitely favoring downside. With this bearish engulfing here at this level, and that was a clear indication that price was moving back, and ultimately a break of 23.6. We should have looked at 38.2 as our first target. Yes, I was able to make some money on this the past couple of days, and my target at 38.2 was reached, and I was able to get out. And this morning on the Asian and European session opens, or the Asian close and European session open, we've seen it bounce now at 38.2. So if this remains still bearish overall, because we've seen there's two pullbacks at an institution moving average and a fall lower, we need to see 38.2 being breached. Okay, whether we see it in the European session, but it needs to close lower, hopefully going into the US session so we can see price moving lower. If it fails to do that and you see a bounce here, then we could see price consolidating again or moving higher intraday to either 23.6, 38.2, 50 or 61 before we see a reattempt to the lows. Okay, so if it bounces here, then we potentially get a nice bullish engulfing here, or bullish orami type thing, or a hammer of some sort, and then we look at our lower time frames to see that relative strength is in fact agreeing with this bounce, then we should be looking for a potential pullback trade intraday for those of you interested in doing that. So let's go into our 4-hour time frames. Let's have a look. So we have an all-time low on the 14th, I think it might have been, all the way to the high. Fib retracement, you can quite clearly see 38.2 prior support here, and yet again, and look at that, back into the institution moving average in our 4-hour. A lot of indecision, spinning tops, a little exhaustion candle followed by another spinning top, and then a little bullish engulfing, and bang, there we go. So support being found at this area here. So where is it likely to bounce to? Well, we take our highs here to the lows, this bounce low, and you can see 23.6 above us at 15,700. Now 15,700 long term overall, we've seen a lot of indecision, or a lot of yeah, it's been very indecisive, 15,700, okay, in the past. Very, very indecisive. A lot of hesitation in that area in the past, so price has to be breaking above and closing higher than that to actually give us an understanding that we should be looking at 38.2 and particularly 50% the overall trend to the upside. Trend direction you can quite clearly see, whether you're trading the actual bodies of the candle, if you're trading the wicks, there again is entirely your choice. Just make sure you're doing wick to wick or body to body, not wick to body or body to wick. Okay, you'll notice that the trend line is in play at 23.6. So are we going to see a bit of hesitation here before we see another extension to the downside, or reattempt to break this very strong 38.2 here and the institution moving average at 1566? If this is to remain bearish, we do need to see this 1566 being breached with a nice bearish engulfing candle, preferably on an hour or 4-hour chart would be even better, because in the long term it will just tell us, let's see, we should be looking for overall shorting opportunities for the foreseeable future. So either break above 26.6 and trade to 38.2 for a possible extension of that retracement, or we look for a break below 38.2 here, which happens to be a very strong support here at 1566, and ultimately back below the 1665 in particular, to see that we're going to be trading a long-term continuation short, as we've seen a break of this very important 38.2 mark. Relative strength on the hourly is still negative. That was the beauty of this trade yesterday. RSI broke through, still above the institution, then broke and found resistance at that level, and we saw prices selling, and 38.2 target being reached yesterday. Nice bounce, consolidative bounce. RSI started to confirm. We started seeing more purchasing contracts instead of shorting contracts. That's going to happen. It's just the nature of the beach as we head towards a resistance level or support. People look at those potential areas as targets, and they sell their contracts or cover there, and then we see a pullback. Depends how much of a pullback do we see before we see a reoccurrence or re-entry to the downside in this particular case. If that's to happen, we need to see a fell here at 23.6 at 15,700 for a nice bearish engulfing to confirm that prices are looking for further shorts. A break below 1565 overall would definitely take us below the institution moving average, and a very strong support and resistance level here for us to even look at contemplating long-term further shorts on this pair. US dollar Swiss franc is the next one. Weekly, mentioned, a lot of indecision, wanted to see a break of 9100 in particular. Anybody trading just recently, the last week or so, would have been able to capitalize quite nicely on this pair. Just on the daily, off this exhaustion candle at resistance level, prior resistance, quite clearly see a resistance, and we traded back into it. Further resistance, this bearish engulfing here with a shooting star, long wick to the upside, pretty much trapping people to the upside before we saw a pullback. And after that candle, definitely looking for potential lows back to support. Price support here at 9100, that was a good target. I made some nice pips on that particular trade with little risk at all, very small risk because of this resistance level here. Price is now trading below that, going into the Asian close and European session open. We had an indecision, we wanted to see a decision candle. Decision candle yesterday, not all that great trading, still trading into that institution, that very strong resistance level, support. And this morning we're trading below it. So now it needs to stay below the 9100 to see if we can see any further extensions to the downside. Okay, so if we take, you can see the high here to these areas here I mentioned, 23.6 acting as a clear resistance in this case. Price rallied up to 38.2 intraday and then pulled back down again. Okay, so if we go into our smaller time frames, let's have a look here. Yeah, the 9110, as I mentioned, needs to stay above below the 9110 now. Found resistance. CTCs in our favor. All the moving averages in our favor. We have our 20, 50, and the institution evenly spaced out, so we know the market sentiment is looking juicy long term. Momentum wise, now it needs to stay above 9100. Find resistance at this level. Okay, price support. Clear support once, and now it's breaking through it. It needs to stay below here. So the next 4 hour candle, very important, needs to stay below. And our hourly would give us our trigger area. You can quite clearly see after the break we're still negative as we went into the 9100 mark just recently. Notice the RSI started to pull back. Quite clearly these two of you are moving lower. However, RSI was pulling back, confirming that sentiment was true. People selling contracts after getting into the initial trade a couple of days back, and now as we head into this strong support, price failed to rally to its high point. If you look at, you take the lows over here, previously you'll notice that 23.6 was a great ceiling level for this price. It failed to break a high on that, and if it did, it went to potentially back to the 38.2 where the institution moving average was, and because it failed to find support at these levels and it came to clear resistance, and RSI was still over in a sold position, we should have been looking for further entries. Ideally we wanted to break below the 9100 to confirm that this momentum is still negative, and sure enough it's starting to do so this morning. Asian session trading lower now. It's got to stay lower than this. I'd like to see price just moving slightly lower, especially on our 4 hour, to confirm that momentum is genuinely looking for shorts. It's not going to be another piercing candle or a little hammer at support. It's done in the past. And then I look for an entry to go short again on this pair. I'm going to go back to the daily. Getting a genuine breakout is important to actually stick with those rules, because if you took the all-time low over here, for example, right back here in August of last year, move it to the highs just recently we saw at the beginning part of this year in January, you'll notice that the 20.6 will be your next potential target. Okay, break of 91, it's a good 100 pips away. break below that, back to the 8800 mark with the institutional moving average, and back to 38 in particular. That'll be your second target, third target, and fourth target here on the daily. Okay, so you can see quite clearly. Nice breach, closed lower, and then we should be definitely looking at 9100, 8650. It starts getting below 8650, start worrying, because the 8600 happens to be where prices were capped at, or pegged at in this case. US dollar, Swiss franc. Swiss government wants currencies to be trading above the 8600 mark for this pair, or the 120 on the euro Swiss franc. US dollar, Japanese yen, last pair of the day. This is the only one who's really been giving us any return for buck. You can see quite clearly this has just been moving higher and higher over the past couple of weeks. Absolutely amazing. This just moving clear decision for the first time. I can't believe I keep saying this, but US dollar, Japanese yen giving us clear decision straight through the 100%. This is the initial market move over here after the great figures non-farm payroll in early Feb. Bounced straight through prior resistance here at 7800. Slight pause, and then another couple of days of just upside movement straight through the 100% fib extension. Slight pause, bit of a pullback, but then momentum gaining strength and straight up to the 161.8 fib extension now, well over extended, and we've seen price on the Asian session moving lower now. Yeah, absolutely crazy moves. We are definitely we do definitely need to see some sort of hesitation now. Let me just see if I can get this right. There we go. And sure enough, there we go. We have our pullback well overextended. Good thing is, though, if it stays at 80, or roughly around the 80, which is our long-term support and resistance line, if you look back at the daily, trek back to last year in particular, you'll notice that early parts of last year, you'll notice that price actually was trading above it for a long period of time, and we saw a break low in that, and that's what set us on this downside trend. Since then, we've had a massive move to the upside over the past couple of weeks, especially in February. Gained a hell of a lot that we lost, or we just went sideways for so long here at 78, or especially below 7800. A lot of resistance above 7800. We've clearly broken that. You can quite clearly see there, and we just rallied since. So support at 80. Look for potential for further upside movement on this pair. Look for a nice bounce down, nice hammer, bullish engulfing at 80, telling people yes, we're now happy above these areas, and find a support, and then just look for longs. Price action on this particular pair has just been just been absolutely crazy, and as long as it trades or finds support above 80, a long-term support and resistance level, I'm just marking on our daily so you can quite clearly see 80. There we go. Massive resistance and support before. We're trading above it now after the breakout. So now huge support, and now we've traded long. Okay, so we need to see this follow through. Nice support here, especially in our daily, nice bullish engulfing, a hammer of some sort, and then we should be looking for longs to the upside to continue. Just going to finish off with our hourly chart. Notice 50 pair moving average acting as a beautiful support for this pair as we've headed higher. Still trading above 50. Clearly above 50, but as you can quite clearly see, price rolling to these areas here, overbought and pulling back. This over here at 80.5 is our 61.8 fib extension level, well overbought now, and we've seen a pullback to occur. As long as it can stay above 80, which happened to be the prior resistance breakout, then we should be looking for support to be found in this area, with a likelihood of a continuation to the upside to materialize from that. That's it, guys. Hope you have a fantastic trading day. Keep it simple. Wait for confirmations from the market, and then you trade the confirmation. Don't second guess the markets. Use all your indicators to give you a bit of an understanding or an idea of what's likely to occur. Get that decision candle, and then we trade it. Until then, trade serenely.